to use, because you might need to show the transaction types like the rebalance calculations. Then, of course, display type. Then you need to effectively look at things, how you are going to treat your penalty fees, income and expenses. So you might need to consider the transaction types for these flows. Then, of course, sometimes you need also to say, okay, when you're doing a rebalancing, you might create a transfer type out and type in type of thing. And then as part of your setup, we are going to look at this shortly. At the moment, I just want to hasten to say, currently you might not be having this type of transaction types, but I'll use what you already have in there. Then the last bit is, when you do the transfer, how are you transferring that? So when we talk of lump sum transfer, we are effectively saying, when you take out the amount from, let's say, from contributions, which you are using as a basis for calculating, you are effectively taking it not as individual entries. So usually that's sort of like more or less the standard, but people might say, okay, we want to look at the individual transaction depending on how the initial investors came in, but we are going to look at that as well. So what we when we do the setup, just like what we did last time, you come here in your normal investment accounting, and under admin, the configuration. For some of you, you won't be doing this. It will be sort of like high level people doing it, but it's important to show you where it's coming from. So what we did last week, we'll have the appropriate the appropriate section here of capital, and under template you come to, just like what we did for transfer there, you come and also look at the subclause. Now, what I've done here, I've just used the default settings which are there, which we already which already discussed, similar to what we did for partner transfer. But the main thing is, these are the key things here: the template, which you are going to use. So for now, I'm just using that. But for income, for the penalty, because we don't have any special sense of penalty fee transaction type which you have, all I've done is I've just by default just used income allocation, and income allocation other expense, and income allocation other income. So effectively, the old partners will get the income, and then these ones will have sort of like an expense against them. Then the calculation itself, usually it's we say 8 day to penalty fee calculation. So because when you do your calculation of the days, it's just what you do with your interest, where you say date minus this current date minus previous day plus 1. That's what effectively it's saying. Otherwise, if you don't do that, it will just assume that the day on which the penalty is calculated is not included. Then, if for any other reason you want to create a payable for the old investors, then by default you can create that. Then the most important thing is to look at the transaction type. And when we look at the transaction types here, for any other reason, if we've got a rebalance transaction type, we can set it up. But for now, we leave that. The most important part is here, whereby we are saying, is it going to be a lump sum transfer? So it's not when we say lump sum, it's just we are not looking at how the contributions came, but just looking at the total contribution. But it will automatically calculate the penalty. So you can then specify and say for which a transaction type are we calculating the penalty? So if I come to the example which I have in your case, which was provided, if I come here, so this is for you, Ali and Nicola
so,
and the team.
So 90% of people won't have seen this file before, so it might be useful to just quickly give a little overview of it.
Yeah, so that's sort of like what I just wanted to confirm with you and say, okay, we have got, these are the original investors if we look at this here. So this one up to that are the original investors. So this is what they committed to bring in, and this is sort of like the commitment they have at that point in time. And then, of course, that was the percentage of ownership. Then this is what was the amount which came through. That is the actual contribution which they made. And also they made that next contribution. Okay. So when we set it up here in the system, I'll come back to this, but I just want to come back to the dashboard. So the investment we are talking about is UR70. So at any point in time, if you come here, you click here. So if you click on here, you can see that if you click here and say review commitments, so it effectively shows the commitment which have been the commitments which we have, and that commitment is basically almost similar to what we have in my Excel spreadsheet, but the total, if you look at this one, is more a good example of just the breakdown. So it will tell us when the date of the commitment was and the total amount. So by now, I think you'll be familiar with that. This is why here we have got that amount. Okay. Now, what we are saying is when this was set up, this particular commitment would have used a transaction type. And I guess that transaction type, if I'm not mistaken, was contribution. This is why then we come to our configuration. We have under subclause, I am choosing that contribution. If it's different, then you choose a different one. And then that is what we are going to use to calculate the penalty. So if I come here in our sheet, it means then that these original investors, they contributed that amount and that amount. And the penalty, all things being equal, correct me if I'm wrong here, Oli. Ali, correct me if I'm wrong. This calculation is then based on the capital calls.
Yeah, based on the dates of the different capital calls.
Of course, yeah, this one. And we'll come back to that. But all we are saying is, at the end, this is what we now call in the penalty. So this is for each of these, this is what these guys are going to pay to the original investors for contributing money. So we can see that this is the first closing day of the commitment. The second day was this one. This is when the other guys came in. So in a nutshell, when we come here, that's what we are basically saying. So for now, this is sort of like the configuration which we'll have. So if I come back now.
Sorry, search more. When you do this configuration, is it this configuration for all the entities, or can you specify for which, for example, fund you want that, that setup? Because let's say maybe certain entities have or require different type of setup. How would that work?
This is just the default setting. So if for any other reason it's a different, for example, if you look here, this is the default IM template which we should have. But when you come back to the transaction types, then you can more or less pick up what you want to pick up in here. So all things being equal, this is just like the partner transfer, the way we looked at it, that it's just a default setting. You can't specify different templates here. It will just be one template.
So can I double check then how we would approach that with, different clients on the system with potentially different needs? If on a Monday we had to do a partner transfer for client A, on Monday morning we would make sure that the setup on the screen that we're looking at right now, the template is accurate for that partner for that subsequent close or that equalization. We would run it, and then if, say, on the Friday a different client with different needs needed to be run, all we would do is go in and change this before we run it for the client B.
No, this is just the default setting. So it's just the default setting. We'll go to the screen and you see how it works. So here we'll get like, for example, let's say you are using, instead of using contribution, you are using another one, for example. So we know that all these are all in there. And when you pick up so this is how it works. Okay. If I look at Urban, the one which we're just looking at, UR70, the transaction type might be contribution. Then you go to the other one, the transaction type might be, let's say, partner transfer. So when you process your transaction type, all things being equal, it will pick the correct transaction type which you use to process the initial contribution. So it means that you tick all the contributions which are applicable here, if that makes sense.
So in the default, we want everything ticked that might be in scope.
Exactly. Because when you process your transaction, remember, when you process your transaction here, your capital call, you are still using that universe. You are still using that. You are still using that universe for your call, but what changes is the type of transaction type which you are using for that particular call. So by default, when you're now doing a capital clause, it will go and pick that particular line which you would have used. So in essence, when you set this up, just make sure that all your transaction types which you are going to use in your clause are picked up. So the most important part is to make sure that you tick up you tick all the necessary there. So if for any reason it's a new let's say it's a new partnership or a new partnership and that has not been specified here, surely when you set up your transaction type, you process your capital transactions, you say, oh, this transaction type is not there, let's add it. So once you add it up, that's when you also come and edit here, if you are going to use it in your clause.
So am I right in thinking that for when we configure this, we probably want everything ticked? Because if it's not in use, it doesn't matter. And in order to make sure...
all things being equal, yes. Because logically, you might use it, you might not use it in your calculation. Yeah. So you might err on the side of caution. But all things being equal, usually, if you look at the example you gave for that, usually we are looking at contributions, because we don't look at the distribution, we just look at what they have put in. So by default, anything to do with contributions might be included in the fee. Okay. We'll look at the example just now on the screen once we've seen that. But that was a good point, Nikolai. Yeah. So once we have got that, here, this is sort of like the detailed description. I'm not going through that, but it explains everything. The things which I just looked at, but in a more detailed way. So it determines, the default fee, what you are going to use it for, the calculation days, which I was talking about, the transfer in and out, the lump sum, and then also this one is very important. Include in fee calculation, which comes back to the point you're asking. How is that? How is that going to be processed? Then, if you don't include that, then the system cannot include that as a penalty type. So that's very important in this case. Okay. So once we have got that, so if I am not sorry, before we go back, there's something which I just wanted to say here. Okay, we have got that, that's fine. So what happens now is once we have got that, we then need to enable the setup of the subclause. So what does this mean? The assumption is you are doing the clause from day one. Okay, so if the fund already has got a clause, there's some things which you need to do. So here I'm just assuming that it's the first clause. So if, for example, you bring in a fund which already has got some clause, we'll look at it at the end, a few tweaks which needs to be done. But what we are effectively saying is, for any entity for which you will be having a clause, it is important to look at it in that respect. So what happens is, in this case, we have got UR70 opium, and this is the next setting which you do. You come here, and right at the bottom there, you click here and enable. So this is very important. So if you are doing it for the first time, make sure that all the investors, the original investors, they've got commitments, because those are the ones which are used to calculate your penalties. Because if you don't have that, then those will not be shown. Then the other thing as well is, if you are doing it for the first time, you just input you just input that number. So if, for example, this is the first one, this is why we put in just one. So if, for example, you have already have 4 clauses before, and you're about to do clause number 5, the number you enter here is 4, which is the prior one, because the system will then look at it from that angle and say, what are we effectively going to be the next clause. So it's quite important to do that. So once you do this, the setup of the clause is done. So any investment vehicle for which you have got investors coming in, and you assume there will be a sub clause, you just need you just need to do this particular setup which I have just shown. Yeah.
So,
now,
sorry, I didn't really follow that exactly. So, what were you? Because I didn't see you add any values of actual money, of additional commitment there. So, how does that feed into actually creating a new investor? And
we'll come back.
Enables the possibility, right?
Yeah. So this is the next step. You now go and say, okay, who are the new investors?
Okay.
What are their commitments? Then you create the next step. So first of all, you have to make sure that for you to perform any sub clause, you have to ensure that that investment entity is marked for to enable that. So that's what you are doing effectively.
Okay, got it. And there already has to be the first close investors on the system before you do that.
Yeah.
Do they have to? And and there's nothing fancy about how you set them up. That can just be like through standard, regular setup.
Correct. You just set up as regular as it is.
Okay, thanks.
Yeah. Now, once you do that, then this answers your next question. Now, again, let's say, like I say, you then ensure that. Then what happens now is your new investors, which you are going to add now, okay? The new investors which you are going to add, you then add them. So those are the ones who, if we look at what you are showing here, these are the new investors, these ones. So you effectively then create, so this is your pre-step before you even process. So you create the new investors, these new investors, okay? You already, when I say you create, if you create the commitments, because you've already created them in the system, I assume, then what we are saying now is let's bring in these new investors. So how does it work on this particular one? Okay. Okay. So in this particular one, we are going to be okay. So you just come to that entity, and I'll just do, let's say, sorry, just I'll just do this. Okay. Okay. Just bear with me. Right. So what we have here is, if you see on the list here, this is what the original investors are. So what you do now is you just come here when there's 3 and you add those commitments. Okay. Now this is very, very important. You find that when you are doing this, just make sure that you have got all the details correct. So in this case, for some of you might be looking at this. This is when these new investors came in on the 25th of February. So all you are doing is, we know that this is the currency, and then the investor, in this case, the first investor I'll just put in is, let's say, on. I think you already have these investors in the system and they don't have anything. And
so
then
we first need to create those investors, right? Because
yes.
From this section we cannot create them, we can only specify which investors they are.
Yes, so you just set up the usual legal entity and then the IM investor. The normal way you invest, you have created these ones. Because the first thing you do is you create the investors, and then after that you put in the actual what we call it, commitment, effectively. So once you do that, you have got here the amount which this guy is contributing 2 million, 1, 2, 3, and
the commitment amount, right?
The commitment amount, which is this one. Okay. And then of course I think you are using this for this particular one, if I'm not mistaken. And then the percentage, this is very important. The percentage will always be 0. Okay, so you put 0. There is a reason why it is, because what it assumes then is when you do the recalculation of the contributions, then it uses this 0 to recalculate what should be the new percentage. So in this case, if we save that and we come to the we come here, you see that it's not showing at the moment because I've not yet sort of like updated. But what happens then is automatically that commitment will be created as a 0 commitment. And if I come to particular report here, commitment, and the investment is UR70, but I'll just show because you can see that this is not being reflected at the moment. So because we have not done any recalculation, it's just showing the historical ones. So what we need to do is then to finish everything else here on UR70. Did somebody add? Because I can see there are 2 already added up. So this is the one which we just added, and that we just added.
Sorry, I have edited. I was just 7.
Okay, that's fine. Yeah. That's fine. It's okay. That's fine. So I just want to make sure that we add everything, so so that there's no duplication. So if you're faster than me, please add the rest and just do the same. Yeah. And once you finish, just let me know. If that's okay, yeah. Just let me know when you're done, then we can continue.
Yeah, I've done that already. Yeah.
Okay, you've done all of them.
No, I've not done all of them because I was just doing. I was looking at the screen and like while you're
doing my
screen.
I
just added, yeah.
Okay. All right. So let's do it this way then. I'll put it on the screen, and then we will say for participation. You did this one, yeah?
Yeah.
Okay. So so that I did that one. So who is going to do this one quickly? Yeah. Can somebody do this one? Assume it's taken. Who is doing this one?
I can maybe help just with flagging people who are actual users on the system.
Yeah.
So
So quickly, you can quickly allocate to Ali if that helps. Yeah.
So I mean, Cyrus and Elle and Camille, are you guys confident with adding a new entity? It's actually one of the questions is initially like, does everyone have the
permissions
access rights to do that? So that's the main issue here. Probably search more.
Okay. Yeah. So let's just
and
do
just
it.
FYI, I don't have access to those entities.
Okay.
So for example, I was following what Searchmore was doing, but for Heitman entities. So I'm not sure if Cyrus or anybody from the Heitman team actually has access to the Urbium entities.
Okay, no, that's fine. Let's just do that then.
Yeah.
Okay.
I can take some, and then even just between you, me, and Jasmine, we can do quick. What did you just do UR90s for codes or?
Sorry.
What? Because we haven't obviously got pre-agreed Yardi code.
Yeah, because this is already exists. These entities already exist. They've already been created. So all I'm doing is I'm just coming here, add the commitment, and in this case, the investor like this or that. Sorry. We just enter that, and it automatically comes through. We know that the date is the 25th, 25, 02. 25, and then the amount is effectively 750. So I just enter 750, 1, 2, 3, and then the percentage is always going to be 0, and then we have got that. So that's what I'm just basically doing, and then just make sure that the transaction currency is correct. Then that's it. So that's done.
I've done the last one as well.
This one, yeah. Okay.
Yeah.
Okay. So, okay, I'm going to do this one. So you do the other one as well. So we do the same. Quite boring for now for everyone, but it's important. It's an important stage for that. The currency, and then the amount is 5 million. And then the percentage always 0, and the transaction type that. I save that. So this is done. Okay. I'll do this one as well. Again, for everyone else, if this is not clear, please feel free to ask as we go through this. So this one is 3 million.
I've done Vishwanathan and Noor as well.
Okay, thank you. So we are all done here. Save. So everything is done now. Okay. Now, this is the step which, when you look at that, you can see we now have got the full list, and these are the additional entities which we have created commitments for. So this is subsequent clause, important to note that this is what I've referred to in my example here as the pre-step. So those are the pre-steps. So there is the one-off thing of making sure that you set up the configuration, make sure that you take up all the appropriate lines for which you might possibly use for calculation. Then when the investment comes in, you go in and do your pre-step. So once you have got that, then you can do your actual processing. So to start a new clause, a subclause, it's quite straightforward. Now, if we look at our Excel spreadsheet, which we have, we know that from that Excel spreadsheet, we know, let's say, this Excel spreadsheet, we know that this is when that clause happened. And that's how we then set up the system. So what I want people to overall get from here is just to look at the key information which you use. Of course, this Excel works in for certain instances. So I'll then look at, come in here and say, okay, before I go any further here, you find that we have got this interest. So this is the penalty which is used for that. So that is the amount which is going to be used to benefit the old investors for being the original investors. And it's important to look at this aspect, because this is how it will look at the calculation itself. So this is sort of like the calculation. So what it does is it looks at the total contribution, and that comes back to the point you raised, Nicola. Say, okay, how do I know the number to use? So when you process your initial commitments and when you process your actual contribution of the original, you use a specified transaction type. So it will automatically then pick that transaction type, multiply by the penalty which you are specifying, by the number of days, by the number of late days. So this is the days by which the new investors are late by from the original date. And then, of course, this is how it's calculated. And the fees assessed only to new members. And this is the point I raised earlier and say it gives you these particular options of saying, do you want to say today's date is inclusive? Then you say +1, because that's what we've done already in the setup. So what it means then is, in this case, if you set it up correctly, all we are doing now is you are coming to transaction type here and create a subclause. Now, if you look at this screen and you say subclause, if you come here, it will automatically pick up for any property for which you have set a subclause. I guess this is you creating that, Nicola?
Yeah, that's me. Sorry.
Yeah. No, you don't have to say sorry. That's actually very good, because you can then follow up and then we can say where the issue are. Then when you come here, now, this is where it's very important. So if you look here, you find that depending on the fund here, whatever contributions, the line of contributions you have set up on the system, then it will pick that up. So here the close was on the 25th of the day when we did our subsequent 25, sorry. Okay. Then by default, you have got the IM templates, but this, for any other reason, if for example, you are going to use a different template for this particular fund, then you can choose that. Although it's by default, this can be changed. Then here, this is where it's very important you specify what percentage you are calculating that. Then here again, depending, these are the default ones. You can change depending on what you want that to be. Okay, you can change. And then here it's by default. You can change as well. And if you want to create a payable, you can just create there. So here I'll just say this is a test. A test subclause.
Can I ask a question, which is actually maybe more for the accountants that have joined this call, and apologies if this is really silly, but in terms of selecting the effective day here for the subclause, is it more common to select the day of the actual like that the close happens, or is it more likely you would select the day of the second drawdown, like the I don't know, the due date of the second drawdown, or the
No, it's the closing, basically.
Date
You're
of the
have
close.
your
Okay.
subscription agreements
Yeah.
date, and
Okay.
that will be it.
So you only pay subsequent closed interest up and until the day of the close, not until the day that you first do a drawdown.
Usually, yes, yeah.
Cool, thanks, that's really helpful.
Yeah, sorry, just on that one, so in Greyguide, we have a slight different mechanism for subclose interest calculation. So usually the subclose is calculated on the closing date, right, when the new investor joins in. However, for Greyguide, we have the date is different when the equalization is actually called rather than the closing date.
Where what is actually called, sorry?
When the equalization money is called, like let's say the call date rather than
Yeah,
the
okay. Okay.
closing date.
Okay.
I guess ultimately you have to follow whatever the
Yeah.
LPA states, right? Because you're gonna
Yeah.
have different conditions depending on depending on the LPA.
Yeah.
Okay.
So I guess in that scenario, and if we want to accommodate for both, search more. If we put the 25th of February as the effective day here, obviously that will allow us to get our 8% calculation correct, but will that also put a log on the system where the system thinks that the second close was the 25th of February? And is there any risk Tarbin, that that's an issue for you, that you actually want to almost have two different dates?
Yeah,
The different date, okay, so like what Nikolai was saying, usually what happens is when you calculate the penalty, it will specify which date, from which date you are going to calculate the penalty from. Okay, the commitment itself, it doesn't matter. So you might, in this case, you can say that our commitment day for the new investors is the same as is the same as what we call it, the date from which we are going to calculate the fee. Okay, so it depends on what it is. The commitment date will never change because that's what your subscriptions, you sign everything, and that's it. Yeah. So here in this case, if for any other reason, let's say the calculation date is later, then that's the day
what we put in the effective day then.
Yes, for calculation purposes, because it will now take that and say, whatever date is, it calculates the number of days. Remember the formula? Okay, if you recall the formula I put here. Again, here. Yeah. So it's the late of days. How many is it? So this is the effective date which we are talking about, to the oldest commitment day, effectively. So that's how it will work. Yeah. So just bear in mind that there are variations, but all things being equal, the old investors want to be paid as much as possible. So they will rather take it from. I mean, it depends on how it negotiate. But if I was an investor, I'll just make sure that I'm not using a later date to calculate the calculation. If you know what I mean. Yeah. Okay. No, that's important. Again, you guys, you can test that, compare it with your Excel spreadsheet which you have been using, and see how it does. So once we do that, if you save, then what it will show you is this particular template. So it will show you is this subclause. So it will tell you automatically by increment that the subclause is now that, and it will tell you automatically that it will increase that, and if you have to go through a workflow, it will go through a workflow. So if I come back now here, here, so what happens now is then you can then do a calculation. So that's step number 2 once we have created it. So what happens is you just have to make sure that your ownership calculation is done properly, and then you choose what you are using. Are you using the outstanding shares or the commitment amount? So this is where the variations comes in, and then of course you can calculate the decimals and then everything there. And in this case, if we come to our, if you come here, if you click on the ownership there, okay, and then it will be, so you can see that, I don't know if you guys can see, I'll just make it bigger. Okay, total commitment must be equal to 100%. So what it does is this commitment will be closed as that, and new ones will be starting on that particular day. And once we have that, so if I calculate, there is you can see that there is now the investors which we have, and we have got the history. Here,
this is not yet posted, right? Because it says
No. This is not yet posted. No.
So this is what we can use to compare, for example, with our workings to make sure that the system is going to post the correct amounts.
Correct. Correct. Okay. So this is what you'll be able to compare. I think there is something which is not right here. Of course, we have got that particular commitment, and what happens then is, okay, let's just come back, process, create commitments. So to what we have here is, I think we created the commitments. So let me just, okay. And what we should now be able to do is, what you're able to do now is, you go in, you go in and in the investor. So there's something which is wrong. There's something which is wrong here. Let me just check something quickly, because what happens then is, once we run that, we come back to the dashboard here, and in the dashboard, you can see that we have got that new amounts. Okay, I just want to make sure this is all good. Okay, that's fine. Let's just go through and see if this will come through again. Okay. So if you come here, okay, which is fine, okay. After the calculation, we come back here. So where is it? Let me see. You guys, did you change the commitments? I can see that there is a start date of commitments from the 28th of this November 2025. What was the reason for that? For this particular fund? Ali?
Would it be something to do with when the fund was actually set up on Yardi, as opposed to?
But the commitment is on the 20th of October. So the 28th was the actual, when you received the actual cash.
I mean, bearing in mind that we haven't been using
like
the close on the system, this will have just been loaded as like the static original data via ETL. So it will have just been like, on the day that we set up the fund, this is the percentage ownership of these investors.
Okay. So this is the reason why, if all things being equal, what should happen is, I should have picked it up early because I was assuming it's quite up to date. But I'll explain so that everyone will understand where we're coming from. So what would happen is, if I come to my transactions here, subclose, and I come to my subclose here, when we came to the information, okay, what will happen is, when we come to the information here, what will happen is it will then automatically show me all the details of the recalculation down there. So somehow you have used a date ahead of the 25th of that, because the other, what I'm saying, the actual clause I think was not used, because I think this is what might have happened. Let me just come here on the commitments. Okay. And that's why the system got a little bit.
So basically,
yeah.
The first closing
Yes.
is after the second closing in the system. Okay.
Yeah. So if you see here, you can see that was that. This was ended, and then it started there. So the system is
The
assuming
ended represent the closing date.
I don't know the reason why this was done in your system, but I assume there is a reason why this was closed. Yeah.
Actually,
this,
to me, well, oh no, I see.
Yeah.
No, but so such more. My question here is, what does the end date represent? The closing, like the supposedly the first closing, the date of the first closing. Is that what's supposed to be representing?
Yes, the 20th. The 20th was the first close of your first. So if we come to your Excel spreadsheet, here, this date, first close, which is when you, then you have your commitment. Okay. But what the system is saying is saying somehow you have said that was not the case. You closed it, and then you said you started a new commitment. So that old commitment is no longer there. It's just using the new commitment.
Can I just flag that when I look at this file, sorry, I was just going to say, it almost looks to me like there have already been two closes. I'm just looking at column K and M, but then so when I look at H and I can see that there's.
It's just to the first one and the second one. Yeah.
But definitely, when you were on Yardi there, the values had not changed, but the percentage had. So I assume there is a second batch of investors.
Exactly.
Guys, can I clarify? Because I'm looking at this file, it's Paulina here, and we have first drawdown date 28th of November, consistent with the date in the system. So it looks like there was first close, which was basically dry close, and then the very first cash flow happened in November. So to properly present this case, we should have the second clause obviously after the drawdown, because then you wouldn't really have any subsequent close interest due if there is no cash flow.
Correct. So this is why I'm saying then the way let me just put on my accounting hat. So looking at this spreadsheet, the way it was looked at, so that we don't confuse people, is when the first documents were signed, whatever you call them nowadays, but when the documents were signed to say, okay, a commitment, the first commitment was signed on the what? The first commitment to the fund was signed on this particular date, this. Okay. It doesn't matter when the actual cash was called. Okay. And then the second commitment, which is the second clause, because when you do your second clause, is when you say, okay, new investors, they've agreed to come in once on this date. Okay. Now the question I have is, when we have the first clause, this is the calculation which is being used. So the assumption is being made that the actual investment started on the 20th of 9th of 2024, even though the actual cash which was received, the actual cash which was called was only received on the 28th of November 2025. So what the system does is it said, okay, you guys, you are the original ones. You will be compensated for holding that investment, even though the actual cash which you contributed might have come in on the 28th. So in a nutshell, that's what it's saying. But the issue we have now is the commitment in the system is showing as the 28th of November 2025, which is different from our second commitment.
But wait, the commitment and the drawdown are different things, because I think the first closing should be the December, but if there has been no drawdown before the second closing occurred, then what rebalancing, like what equalization is there? Because nothing has been invested, nothing has happened between the first and the second, tranche of investors coming in. Maybe that date should have been 2026, perhaps, instead of 25th February 2025. Maybe it was supposed to be 2026. I mean, how was this, like, because I don't have this file with me. How was this interest on late capital calculated? What is it based on?
It's based on the commitment date, not the actual funds, which makes sense, because it depends on what the fund documentation says. So if it's saying, I think it comes back to, I don't know who it was who was saying earlier, talking of the actual capital. So the question is, are you, if you look at the way it's calculating, are you calculating your commitment date, even though the cash has not happened? If for any other reason you wanted it to be the same as the capital cash, then of course, if I come here, let me just come back to our example here, so that we don't confuse everyone. Let's do it systematically. So what I am saying here is, if that was the case, then this clause here would have been after 28th of November 11, 2025. So 1 day later or whatever. And then it will calculate based on the actual cash which came in, if that makes sense.
Yeah, that's what would normally happen.
Exactly. So the issue is, I think, which you guys need to explain to me, is which date should I use here? Because my assumption when I got this was based on the fact that the documentation is saying this is calculated based on the commitment. It's disregarding when the actual cash, the real cash, came in. And that was the basis of the example. And if that's the case, then it means that when you set up your commitments here, you should not change the date. You should remain it as 29th. Yes, the contribution will come later. Then you put in, when you look at the contribution here, if I come to IM, I'll just quickly do this as an example and display that. If I come here, okay, then it will show me the contribution which he made. So you can see that actually he made a contribution on the 29th of that. So I'm not sure why the November one is coming in. Here it's telling me that it was actually in 2024. So I'm not sure why that setup is slightly different.
But if there was already contribution in 2024, then shouldn't it worked?
It should work, but the commitment has been changed. That's the point I'm making. That commitment here, it's this here. The problem is here. If I come to commitments, the commitments, UR70. The question I want to ask is, why was this changed here? So if we look at the example which I just shown here, duplicate, and I have
I see. So all of their
look at-
commitments were terminated, and then new commitments were created.
Exactly. So it means that if I come here, for example, and I look at this person, number 2. Yeah. Yeah. Sorry, let me just go back. Just bear with me because we want to explain it systematically, okay? So that you see what I'm referring to. Okay, so if I click on the contribution, okay, so you see his contribution. So if I come here, number 2, it's saying the contribution ended on that, and then there was a new commitment ended on that, then there was a new commitment. So it means that
Can you scroll down to the bottom of this list so we can check that there aren't, no, just the one you were on, just to see if there aren't new investors, because the percent changes, the number doesn't.
Yeah.
So those last ones at the bottom don't have doubles.
Yeah, because these are the ones which we created, remember? So
Right, okay.
yeah, because they have nothing. But the problem is with the other ones. It's so this one is fine. So these are the ones which we created, the 0 ones, and that's the problem. Is if you come here here for this particular one, yeah, and you compare it with here, it's saying that there was a new commitment. Is that one ended?
Yeah.
And then that's where the
Unfortunately,
issue.
we don't have Ashley on the call. She would probably be able to explain the,
Yeah,
the client-specific situation that led to that.
Yeah. So this is why. That's why. Let's go back to what we want to do, but the logic, I think people understand. This is what.
So tomorrow, can we just change the date so we can see how the system would calculate? Because if we put, let's say, 2026, then it will consider it after the initial, I suppose, investors, initial closing, and then we would be able to see what the system would basically do. I mean, again, we won't be able to compare it with that schedule that you have because obviously there will be a mismatch on the dates, but at least we'll see how the system would work.
Yeah. So what we are saying is we need to delete that and change that date effectively. That's what we are saying. So
can we just leave the system as it is because it probably take longer?
I'm not going to touch anything.
Oh, okay.
I was going to suggest that, but what I'm just saying, that's what it will mean. So let's go through. I'll explain based on what we've done. Then, but when you come back, you do a typical example. You find out from the person who does this the reason for that. You can always make the changes as appropriate. So that's why we hit a snag there. Okay, but all things being equal, what happens is when you run, when I'm cognizant of where we are, but when you run, let's go back to what the steps just to make sure we go back. So when you come to your subclause, and all things being equal, you are happy with what has been done, and then all the changes have been made. Now, what's important is when you come to our presentation here, is you'll be able then to create your transactions. So what you are saying is basically you build all these transactions, then it will create the penalties and everything, and also the transaction amounts which needs to be done. Then once you have done that, the final part will be you post the transactions. So in terms of posting itself, it's not an issue as long as all the details are all correct. And then this is where you then be able to process all your transactions. So if I come back to our issue here, where is it?
Sorry, Shankar, I think what Nikolai and Polina and I were suggesting is what we did there was and I've just taken a screen grab of it and put it in the chat. We went into add commitment and we set everyone up with a day that was in 2025 and was before November 25. If we had have put that as a date in 2026, would it theoretically all have worked? And if so, can we go back and change those commitment
Yeah, that was my suggestion.
start dates?
You can change
So
that
we
to the
would like to
original.
do that on the call, is what we're saying.
It will take us time, so I'll rather you guys follow the steps which I have. Do it, run this and see if it works. If not, we can have another call and correct any issue.
The only problem is we obviously won't be able to see it. So the whole purpose of this call is to present us the walkthrough in the system. If I'm not mistaken, we're talking about like 8 investors changing the date in the. So it should take us literally 5 minutes.
If you can do that, that's not a problem. You can do that.
Do you know, is it possible to edit an existing commitment rather than adding new?
It depends on, because it's in the test environment. Because it's in the test environment, you can just go and edit the commitment, isn't it? It's just in the test environment anyway. So
yeah, I just don't know how. I think you need to show us quickly how to do that, and then maybe we can work on that in the background, and you can carry on.
Okay, so you find okay. Sorry, we can quickly go back to that. I'll just have to unwind this.
I'm
but I
in
just
the system, and I'm changing the year to 26 for those investors.
To the correct date of 20 of this date.
It will be the same month. It's just the year will be 26. Can I just get the Excel file? FH Investment, Nur Shabib, Abdul, whatever it is.
This is the date which we want, because we want to make sure that the calculation is correct there.
Just
no,
the calculation is not going to match.
Care.
Yeah. Oh, the calculation. Okay, that's fine. File. Okay, as long as the date is before that. The clause, I mean the first commitment, as long as it's before that date.
I think I changed. If you could have a look on your end.
Okay, so let me just go. So what
I changed 8 investors.
So if I go to the dashboard, okay, that's fine. Let's see if it works.
Yeah, I can see it's 2026.
So you change the commitment to 2026. So we are assuming that that's the effective date. Okay.
Yeah, for the second clause. Yeah.
Okay. Now it's going to be a little bit tricky here because I made a mistake then. Okay, let's see. Okay, that's fine. I see what you mean. So you just change for the new investors. You just change the date. Okay. So let's just go back. Okay, I see what you mean. Okay.
I guess we need to also change the sub-clause date, to 26.
Yes, and this is where I'm saying I made a mistake here. Okay. Can you just make sure that you've got a screenshot of what you just did? Because something is going to happen there.
Which screenshot? Sorry, because I haven't done any screenshots.
Okay, so let's say here. Okay, so let's just go in here. I am going to change this because remember I used the wrong date, so I have to start this again. So I will just
before you do it. Do we need to do any screenshots you mentioned?
No. The screenshot I was talking about is we can always start from afresh to make sure that we are clear. We use the date 25 of that. Okay, so I'll just delete this. So if I come here, we don't have it anymore. So let's just come to make sure that we have got the correct one, R70. We should be able to run this with the time left, let's say, on the commitments. Okay, so I deleted that, if you see. I deleted that because we are going to now restart the commitments. This is what I meant. Because the stuff was all distorted. We have now to come again and just do the same thing. First of all, we add the commitments. Okay. This is what I meant when I say that screenshot, so that you can see the comment. But the commitment here will now be February.
So what I did didn't work. We have to add the investors again.
Yes, because we didn't recalculate, we didn't create the commitments, if you know what I mean. Yeah. So you have to do it again because we deleted the clause. So you restart the process again to create the commitments, because what we created earlier, we deleted it because it was not the correct one. So here we use this particular one. Okay. So if I come and sorry.
I think we can divide this the way we did it earlier, and we can do it quickly.
Yeah. Okay.
Okay. I'll take the one from the bottom up, and then you can take the one from.
Okay.
Yeah. Thanks.
Do you have the screenshot already?
I think that's there's a screen grab I did in the chat, so I think that I will be able to use.
Okay. Okay. So just make sure that you use that date.
Sure. Yeah.
This as well.
I'm doing the middle one up to whatever it is, 3,000.
Okay. I'll do Noor then, just below that.
Yeah. So
and
just
the date will be 20.
This date, 25th of February 2026.
25th of February. Okay.
Yeah. So just make sure that. Okay. Just make sure that it's 0 and. Okay.
Can I help with one? I've done Noor. I can do Viswanathan.
I'm just doing the second one. Okay.
Anyone that did FH investments?
Nope.
Okay, I'm picking up FH.
I've just done the first two, so hopefully we can check the rest.
Cool. I think Paulina's done FH and Abdul. I've done Noor and Viswanathan and Jasmine. Had you done Saba and Erbium?
I did RBM and Saba, and I was doing Vishwanath, and I just found that it's already been done, so there was an error at my side.
Yes, I did that one.
Yeah.
Cool.
That's fine.
All good.
Okay. We could just check. Hopefully, I'll added all required details.
Okay. These ones, did you put in the amounts?
Oh, sorry, that's my bad. I just left those as 0. So that was
the commitment is 0, but the amounts, yeah.
Okay, no, that's totally my bad. I was doing 0 intentionally there.
Okay. So just confirm if this is our total at the end should, yeah, it's missing those 2 numbers.
Okay. Do I need to delete those or?
No. You can just put
again?
in. You can just put in the on the commitments. Review the commitment and then just put in the amount. What amount is that?
I have done that.
Okay.
Amazing.
Thank you. Okay, thank you. So now what we have is we have got our UR70. Hopefully this works now. If it doesn't work, you can sacrifice me, guys. So we still have got this one. Do you do this one as well? This one.
I'll do that one as well. No
Yeah.
worries. All done.
Okay. So now what we have is, all things being equal, then this should all be done. And then if we look at the total now, this should be the same as what we have in the spreadsheet. Okay. All things being equal now, what we are saying is we should be able to come and do a sub clause, and that sub clause now should be 70, and we are saying is on the 25th of February, and then we are going to have
2026.
It should be 2026.
yeah. Oh, sorry, it's me now being in this. So sorry about that. Test subclause example. So if we save that, okay, if we come here and we calculate, there it is, it's working now. You can see that now?
Yeah.
Yeah. So those are your commitments. So just to make sure that it adds to 100, okay, it's always good to just make sure that you tick one of that to make sure that
like the rounding.
Rounding off.
Rounding.
Yeah. Okay. So perfect. So I'm happy now. So it's important, your dates, yeah. To do that.
Sorry, I see we have an option for decimal places. Can we increase that? For example?
Exactly. You can increase it up to 13.
Okay. Nice.
Yeah. So you have got that. So once you are done like this, you can then. So the most important thing, just for everyone else, is you can see the calculation. The calculations which are there, the new commitments are changing. Yeah. So if I submit this, then what we have is you can have the history, and you can have what has happened in the history. You can come to the investors, and then you now create. This is where we're talking about creating the commitments for the new ones. So if I create the commitments, it now creates the new commitments. Okay. And if you view, you can see what it does. Then it changes the commitment.
So create commitments is not the same as add commitments. Create is more like posting them, so making them real.
Real, yes. And then what happens then is we can build the transactions. And
Can I just clarify? So whenever we post the commitment by clicking create commitments, at this stage, there is no penalty fees calculated yet. Right?
Yeah, so this is where we have there is no penalty fee calculated yet, because we are checking to make sure that all the details are correct. And now
can I just ask, so it's more because obviously the example we're working through is the one with cash flow, so the penalty fees need to be calculated. But if we have subsequent close, which or all previous clauses were dry, so there was no cash exchange, and LPA says no penalty fees unless there is actually cash flow happening. would we be able to just stop here? So basically, okay, we created commitment, we finalized the clause, subsequent one, but there is no cash exchange.
Yeah, so there will be in your penalty, instead of the 8%, you just put 0.
Okay.
Yeah.
So we always have to go through the step, but then
Yes.
you just put 0.
Yes.
Okay.
Yeah. If there is no penalty, as long as because you want to document all your sub clause, so you go through this process. Otherwise, if you don't need to, it means that you just generate your normal commitments. If you know what I mean, you just generate your normal commitments, and then there won't be any penalties. So once you do that, then you can see the calculation is there now. Once you have created the commitments, you are happy, you've got this penalty. So the question is, because we have done some details, then the calculation will calculate whatever it is, and then it will calculate a penalty of that. And once you are happy with, you have reviewed all the batches, you are happy, and then you also review so this is for the new investors. You can also do for the old investors, how much are they going to receive. Once you are happy with that, then only then will you post the transaction. Then the clause is finished. So if, let's say, assuming we are happy, then if we post that, again, I'll just put it early.
Search more. So the system will always take the date at the initial closing and calculate the dates from that point of time, and for example, not from the point of the actual first drawdown.
Correct. So if you come here, what if you recall in my presentation, I'll just give it here, is I'll just go back a little bit on the formula.
My point is, can you change it? Let's say, I don't know, we have an LPA which says that it's based, like the penalty fee is from the date of the first draw rather than from the commitment.
That's a good question. I don't think that works because it's picking. This is the formula. So it's a good point. I'll just need to investigate that. Okay.
On the same topic, I would have also, and again, haven't looked at subsequent close interest in a really long time, but I would have also thought that you calculate different amounts. So if you're doing your third close and some investors contributed only to the second close but not the first, I assume that their return was based on a calculation from the day that they contributed into the fund or closed in the fund.
That's their commitment date for that particular investor.
So they would look at more than one commitment start date.
Yeah, exactly. It's not
Got it.
yeah. So it takes that into account when that investor came in. So, for example, we have done a second clause here. So if we come to the third clause, it means that, for example, Abdul or the other company, their calculation will be as from the 25th of Feb to that date. Mostly the older ones will start from 11, whatever date the calculation is coming from. Okay, so this is what it is. The only difference is, like I say, you have to be very careful in terms of the end date, but the beginning date is fixed depending on the day you came in.
Would you mind to investigate it and advise to us?
Based on the system, based on the system. So just to get it clear, so that I'm clear from your point of view. Let's just go back here. I'll just save this for now. Okay. So I'll just so that I complete this. I'll come back to your point because this is the last stage. So Oh, did I post that? Come on. So it's going to do the calculation in the background. Then when it finishes, it will tell me that's finished. So coming to your point, okay. So if we look at the investors themselves, okay, I'll just look at this. Let's look at the old investor, for example. So he contributed. The commitment date was that, which is what you have.
I think the contributions are below, no? Like one was on the 22nd of September.
Yes.
And then the other one was in, I think, yeah, 11th of, wait, I'm not sure if this is this American style, right?
Yeah. So what we are saying is the contributions would take into account when they were taken in. So that's why the rebalancing is taken at that point in time. So your point was, when was the contribution done? So it will look at the oldest contribution line there. So instead of calculating individual, we said it takes it as a what do you call it? As a lump sum. So it will take the number of days into account. So it will weight this.
So my point is, it's based on the date of the contribution or on the date of the closing, on the first closing. And can we change that date depending on the LPA?
Let me come back to you on that.
I think difficulty here is that you sort of combine two events into one when you record it in Yardi: rebalance and equalization.
Correct.
And for rebalance, we would normally obviously want to treat all investors. Again, LPA prevail, but the standard approach is you treat investors as they enter the fund from the very start. Yeah, so that's the reason we're doing all this different money exchange, so they can be in this position treated as from the very first day.
Yes.
And you do rebalance on that basis. However, for equalization, LPA might have, variety of approaches. You might take basically the cash flow date, so it doesn't even matter whether the close is on 25th and the drawdown is on 25th, but investors decided to pay twice for this one on random dates, and you would take this random dates to calculate subsequent interest. It's a bit of exaggeration, but what I mean, LPA is flexible on that, or can be flexible. So is the system flexible enough?
The answer is yes. I think I'm confusing people there. Let me just come back to your point you are making here. So if you come here, in terms of, I think I have written it somewhere. So there are two things here, okay? Like you said, the first one is taking into account the commitment date, okay? Which is effectively when they commit to the amount. So this is what we were looking at, the commitment date we were talking about, okay? So in this case, in our example, which we had was the commitment date was initially the 20th of September 2024, but we know that the commitment was changed to close the old one, and a new one was created on the 28th of November. And that is why it created a problem, because the subsequent clause, although the subsequent clause was on the 25th of February 2025, which didn't make sense. That's why we changed it to 2026. So from a commitment date, then what those dates are used for calculating the commitment, what percentage of the commitment it is. So that is very important. So when it comes to the calculation, it will just say, okay, at the point at which we are calculating the amount of the equalization. The equalization is the second stage, okay, which is the penalty fee, which we are calling the penalty fee. And when we look at the penalty fee, what it's effectively saying now is it's now picking the amount on the date the contribution came, which is here. This is the example now which I'm looking at.
Sorry, I'm.
Yeah.
Yeah.
So this is on the day the contribution came. So we had that contribution and that contribution. And that is what it's used to rebalance, because we are saying at that point in time, that is what the basis was. And that is the calculation at which that amount is then done. This is why I wanted to make sure that we replicate an actual instance, so that when you compare the amounts, you can see that they are what you have. The only issue we have here as well is on the setup is, if you recall the way I put in the setup, I'll come back to this one, was, if we come to the setup here on the configuration, you guys have to make a call of saying, when you do that, do you want it to be a lump sum transfer, or you want it to be the individual lines? So if it's the individual lines, then it will take into account that individually and that individually, if that makes sense.
Okay.
Would
So
the calculation change, or it's just the way it's being booked?
It's just the calculation will not change. The overall amount which you expect is not changing, because it's taking it correctly from when you contributed the amount. The only issue is, I think the only issue is, does it give you an option to decide a different date? The system doesn't. So if, for example, yes, we know that the cash came in on that, but we are saying we want that calculation to be on a specified date, that system does not work that way anymore at the moment, if that makes sense.
can you override the amounts? Probably, it will be rarer of, a situation where it's different basis than the standard one. But if there is, can you change them?
The question is, if you come to, let's say, is this being posted? Yeah, if it has been posted now, okay. So if I come to that has been posted, you can see that there is no option to edit that. So either you.
What about before the posting?
Before the posting, we can check that and make sure that that's what the calculation is like. I think you should be able to make that change. Yeah.
Okay.
Again, I want you guys to retest that.
Yeah.
Can
I also ask, because the basis of calculating the subsequent close interest, you've given us the based on 365 days a year. Is there an option in the system to amend it, for example, to include leap year?
The short answer is no, but I will come back to you. on that, because it's just the standard formula which we have here, which I think I have this one.
Yeah.
Yeah. The short answer is no. But again, if it's a leap year, I think it should take into account the leap year. I'll confirm for you for that. So what I can ask Ali is if we can aggregate all the questions for me, and then you just send them in one big email to make sure that I've captured everything. Yeah.
Yeah, that sounds good. I can do that.
Yeah. But logically, I think the questions you are asking are correct, and what I have here is sort of like the sort of like the common way of how it's calculated, but it's always important for you to take a practical example from your side. You calculate it the way we calculate it and highlight the differences which I might not have picked up correctly from my side, and I'll escalate that to make sure that you have got the correct answer for that.
Yeah, brilliant.
Yeah.
No, honestly, it makes me makes me very proud to be at IQEQ for the quality of the questions that have come through today. You know, like we're devils in the detail with something like this. If it's going to work for us, we need to know that it can handle some of these like left field, slightly out of the norm situations. So yeah, thanks, especially Polina and Nikolai, for kind of thinking through this practically in terms of all the different scenarios. And if you guys have further questions, I'll pull them all together as well.
Sounds good.
Which is great. So you'll find that in terms of how you look at it, just go through this as an example for your particular fund, if you've got an equalization, and then just follow the same steps, and then come back with any issues which you have. So if there is a need to change, for example, here the rebalance is just using the contribution, but if there is a need to separate that, it's also important to do that in terms of your transaction type. But the generic way of looking at it is, as it is now, it will show what the rebalance was from a contribution point of view, not the fee part. I think the fee part, that's where most of the issue is, because the contribution always use the commitment, if it makes sense. It's the calculation of the fee which is also important. This. Yeah. And say, okay, what is it? What is the sum of penalty on the effective date? How did it calculate that? And then the fee.
Yeah.
That's great. That's very helpful. Much more.
Okay. Yeah, most welcome. So that's the what do you call it? That's the subclause. The process itself, if you follow it systematically, it's fine. But it has got those nuances which you guys have highlighted, and then of course, this is the thing which we are looking at. And then, if you have got any other comments, please put them. Please give me that list of questions.
Yeah. So we'll do a bit of testing. If you can send your slide deck, the presentation as well, that'd be really helpful to just help us walk through it.
Yeah, I'll send that through, and hopefully it helps. Yeah. If there's anything which is wrong with our system, also it helps us from my end as well to make sure that's corrected. Yeah.
We could give you heaps of ideas for your roadmap, for sure.
Yeah. So, any other questions, please? I want all questions through. Yeah.
Great. Brilliant. We will do. Thank you so much, Searchmore.
Okay. Okay. Thank you, everyone. Have a lovely weekend. If we don't speak soon. Next week we'll be looking at the investment transfer. Okay.
Perfect. Great. Thank you.
Okay. Thank you.
Thank you.
Bye-bye.
Bye-bye.
Bye.